Hey, everybody, welcome to Rogue Radar. We are here with Bill and Brian, and thanks for joining us. We're going to keep you for 5 minutes or less. So we're going to take a quick look at the charts. Crude is kind of neutral to where it exited last week. It is facing a little bit of resistance at 111. We think it's going to continue to grind up, or at least I do, up to about 116. And natural gas started off the day off significantly, went down to 785 and has rebounded to 844. And it is about to break through. If it breaks through 56, it's going to make a run at $9 again. So gas is definitely on the move. Something to be aware of is we have had decreasing volume as this up move has happened. Sometimes that means that they're reloading to push it up or push it down. I actually think it's going to be pushed back down, but I might be in the minority there. So let's take a quick look at forward strip. 2022 is up over 8. 23 is close to 450 or 350 less than 2022 at 558. And then 24, 25, 26 are all above 4. Those were previously hanging around $3. WTI looks pretty strong on the front, but year over year, you're coming up with $10 to $15 spreads. So one strategy that can be in there is to buy the deferreds if you remain bullish. Bill, what's on your mind today?
Well, talking about gas real quick on the technical side, I believe today's expiry day, isn't it?
I think it's too early. Let's see, 1, 2. Let's see, we have Memorial Day next weekend, right?
Right.
1, 2, 3. So expiry is on Thursday storage. So Thursday is going to be a volatile day.
Yeah. So I think this might be some stuff leading up to that.
Okay.
So, and depending on where people, and I think that's why the volume is down, is because they're not quite ready to get out of their positions yet. So that's what I think on gas technical. Oil is going to be, it's trading in a range that seems to be pretty hard set. So until it starts breaking out of that range, I think we'll see it. I think it can go I don't think it's going to make it to 116. I think it can make it to 115. I think that's sort of where I'm at on that.
Okay.
On the technical. But let's talk about fundamentals, because a lot of times we say the word fundamental, a lot of people don't understand what we're talking about. Fundamentals are basically the balance of the physical market. So when you have a demand, and in the U.S. right now, I still think we're at about 22 million barrels a day of demand, you have to figure out how you meet that demand. So on our charts, what we show you is that we've got 11.9 of production. Now, I realize not all that production can be refined in the U.S., but that's all of the U.S. production. So some of that will have to be exported, and we will have to import. And so on our next line, we talk about the net imports of being 3.48. So what that does, you look up there where it's the total crude supply is 14.95.
Yeah, that's correct.
That is your crude supply, and it comes from production and net imports. So we have imports and exports. So the net imports gets us to that 14.95. So you look down here and you saw refining inputs at 15.9. You say, well, wait, that doesn't add up. So we're doing refining inputs. So that's what we're doing right now. That's total of 15.9, basically 16 million barrels a day. And that really is our total refining capacity. There's no refineries that are down. That's it. So when you have basically 16 million barrels a day of refining capacity and 22 million barrels a day of demand, that means you have to import about 6 million barrels a day of refined crude products, basically diesel and gasoline, unleaded gasoline. So that's what fundamental means. It's the physical balance of the market. Where do the molecules go?
You don't have those constraints when you're talking about technicals, because you can trade technicals as big as you want or small as you want. But in the fundamentals, we go by what we physically can move. It's the same way in natural gas. And we use the same balancing formula in natural gas. The difference in natural gas is that there is a storage injection season. That injection season is April through October. And so we have to put storage in there, because in the winter, our demand exceeds our ability to produce.
Yep.
And so the balance has to come out of storage.
And that's part of the reason in Rogue Edge, we kind of identify this and show seasonally. And that way you can kind of gauge when production is up here and consumption is down here, we're filling storage to cover this gap, because that gap is quite big. And for example, right now we have 95 BCF a day of dry natural gas production, 5 BCF a day of Canadian imports. Going to skip over LNG imports because it's not really impactful. And the U.S. demand is 86.6 BCF a day. And so what that leaves you with is a total supply of 100.2 versus this 86. We have an implied injection every day of 13.6. But a lot of that,
that's net
of exports, because we do count exports to Mexico, LNG exports. But the key variable to watch is power, industrial, residential, and commercial demand, because this number right here is really going to be the variable that is going to swing that injection up or down based upon whether or not we have a lot of AC load, which is going to kick up your power demand. So
folks, that's the basics. I mean, Brian and I, we're geeky enough. We can go on this forever and ever and ever. Don't want to take up your time. If you want to know more about that, take a look at the charts, give us a call. Be more than happy to talk about it. That's what I got, Brian.
Hey, sounds great. Thanks so much, everybody. Appreciate you listening, and come see us, energyrogue.com.